Good afternoon, everyone. My name is Paul Yiling, and today I will presenting my individual assignment on the adoption of Buy Now, Pay Later, commonly known as BNPL, among Generation Z in Malaysia. This topic sits at the intersection of financial technology, consumer behavior, and digital economic inclusion, making it highly relevant to our cause. Let's get started. Here is a quick roadmap of what I will cover in the next 15 minutes. We will begin with the background and context, then understand what BNPL is and how it works. We will look at who Gen Z is in Malaysia, explore what drives their adoption and what holds them back, analyze some data insight, discuss the risk and regulatory landscape, and finish with my recommendation. To set the scene, BNPL is no longer a niche product. In Malaysia, the market is estimated at 1.6 billion as of 2023, with over 40% year-on-year growth across Southeast Asia. Importantly, 67% of Malaysian Gen Z are already aware of BNPL. That is a massive awareness base has not yet fully converted to active user. So why does this matter? We are already at a critical inflection point. Gen Z, those born between 1997 and 2012, are entering adulthood, beginning their career and formatting their financial habits. Right now, the decision they make the credit and spending will define their financial health for decades. Understanding what driven or deter their BNPL adoption is therefore not just academic exercise. It has a real implication for fintech operator, regulator, and financial educator alike. Before we go further, let me quickly explain how BNPL works because the model is deceptively simple and simplicity is actually one of its biggest selling points. A consumer select a product, choose BNPL at checkout, receive instant credit approval, get their item immediately and repay in installment. Typically 3 to 4 equal payment over 6 to 12 weeks, often with zero interest. In Malaysia, the key player include local operator like Split, IOU Pay, and regional player like Hola and Atomy, and super app integration like Grab Pay Later. Each has slightly different model, but all share that core frictionless purchase experience. What differentiates BNPL from a traditional credit card is the simplicity, no annual fee, no complex application, and instant approval, even for first-time user with no credit history. The last point is especially significant for Gen Z. Now, who exactly are we talking about? Malaysia Gen Z number approximately 7.5 million people, around 23 of the total population. They are digital native in the trust sense. 91% own a smartphone and 78% shop online at least once a month. Looking at the chart on the right, Shopee dominant Gen Z online shopping behavior at the 82%, followed by Lazada at 68% and rapidly growth TikTok Shop at 54%. This matter because BNPL is deeply integrated into this very platform. If a Gen Z user is already on Shopee daily, BNPL is literally one tap away from them checkout. This digital embeddedness is a structural advantage that BNPL enjoy with the cohort that it simply cannot replicate with older generation. So what is actually pulling Gen Z towards BNPL? I've identified 6 core drivers. First, the most powerful, most BNPL plans charge zero interest for short installment. For a student, a fresh grad with limited income, that is a far more attractive than a credit card charging 18% per annum. Second, the instant approval process. Unlike bank which demand payslip, EPFs, statement, and credit check, BNPL approval happen in second with minimal documentation. For example, Gen Z with no credit history. This removes a huge barrier. Third, a seamless mobile UX. It's built directly into apps Gen Z already use every day. Fourth, it enables access to aspiration good, electronics, fashion, lifestyle product that Gen Z aspire to own but cannot always afford upfront. Fifth, peer influence and social media normalization. When your friends are all using BNPL and influencer promote it, it becomes the default behavior. And six, financial inclusion. BNPL is serving the underbanked segment that traditional credit ignore. But adoption is not without friction. Four key barriers stand out. The most fundamental is low financial literacy. Many Gen Z users do not fully understand how late payment fee accumulate or what happens when they have multiple BNPL accounts running simultaneously, what researchers call debt stacking. Second is a trust deficit, concern about data privacy and the legitimacy of newer BNPL operator persist, especially among the first-time user or those who have heard negative story. Third, unstable income. Students and fresh grad may genuinely not know if they will have money available when the next installment is due. That uncertainty is a real deterrent. And fourth, limited merchants accepted. Right now, BNPL is concentrated in fashion and electronic. If it is not available at pharmacy, grocery store, healthcare provider, it has limited utility for covering everyday essential expenses. Let's now look at what the data tells us. On the left, we see BNPL adoption rate by age group. The 23 to 26 age bracket, university students and young professionals show the highest adoption at 61%. This is followed by the 19 to 22 age group at the 42%, which represent matriculation and early university year. Notably, adoption dropped sharply from 36 to 45 cohort, confirming that BNPL is fundamentally a young adult product. One on the right, the pie chart breakdown how Gen Z spend using BNPL. Fashion and apparel lead at 35%, followed by electronics at 28%, beauty and skincare at the 18%. The travel account for 11% and only 8% goes to fruit and grocery, reinforcing that BNPL remain aspiration rather than essential in usage pattern for now. The growth numbers are shrinking. The total BNPL users in Malaysia are projected to grow from 0.4 million in 2020 to an estimated 6.2 billion by 2025. Gen Z specifically is projected to grow from 150,000 users to 3.5 billion in the same period. That means Gen Z is on track to represent over 56 of all BNPL users by 2025, a dominant share. This trajectory has significant implications for product design, risk management, and regulation, all of which we must plan for now, not after the fact. With rapid growth comes risk. On the consumer side, the most pressing concern is debt stacking. Gen Z users spreading their purchase across multi BNPL account without a consolidated view of their total obligation. Late fees, while appearing small individual, can erode savings significantly for low-income users. There is also a behavior risk. BNPL make phantom debt invisible, normalizing impulse spending. On the regulatory side, Malaysia has been gradually building its framework. Bank Negara Malaysia has issued guidelines under the Financial Service Act mandating total repayment disclosure at the point of purchase. Creditworthiness checks are now required for purchase above 2,000. The Securities Commission is also exploiting integrating BNPL awareness into financial literacy mandate. The regulatory direction is positive, but enforcement and consumer education remain the outstanding challenges. To ground this analysis academically, I apply the technology acceptance model TAM to explain BNPL adoption intent among Malaysian Gen Z. TAM posits that perceived usefulness and perceived easy of use driven attitude towards you, which in turn drive behavior intention. In this case, the intention to adopt and regularly use BNPL. Critically, three moderating factors specific to Malaysian Gen Z shape this model. Social influence, the outside role of peer and influencer endorsement, financial literacy which either enable or prevent informed adoption, and trust and security, confident in how BNPL operators handle personal and financial data. This framework helps predators identify exactly where to intervene, whether through improving product UX, building consumer trust, and raising financial literacy. Based on the analysis, I have three sets of target recommendations for BNPL operator enable financial literacy to lead directly into the app. Offer real-time spending dashboard, gamify responsible repayment, and expand into daily necessity to shift BNPL from aspiration to practical. From policy maker at BNPL, mandate standardized APR disclosure, cap credit limits for user under 21, integrate BNPL data into secrets for a comprehensive credit picture, and fund fintech literacy campaign targeting Gen Z specifically. For financial educator, bring BNPL case study into university syllabus, including this course. Partner with social media influencer for bite-sized financial wellness content and develop peer mentorship program on credit management. To conclude, four key takeaways from this presentation. One, Gen Z is a primary growth engine for BNPL in Malaysia, driven by digital nativity and unmet demand for the flexi credit. Two, adoption is accelerating, but financial literacy gap create real systematic risk if left unaddressed. Three, a balanced ecosystem of smart regulation, proactive education, and responsible product design is essential for sustainable, inclusive BNPL growth. And four, data confirm the 19 to 26 age group has the highest adopter. Any intervention program targeting this cohort will have maximum impact. Thank you very much for your attention.